RSUs, restrictive stock units. They're fantastic when you receive them, but do you understand the tax implications? Stay tuned, I'm going to cover the deets in this video. Now in this video, I'm covering RSUs, not ESPPs, not ISOs, not NSOs. Those are covered in other videos. Today we're talking about restrictive stock units and the tax implications of those on your tax return, and how I don't want you to pay double taxes because a simple mistake is made. Before I dive into this topic, let me just throw out a quick disclaimer. This video is for informational purposes only. It's not to be, any information I give you in this video is not to be construed as personal tax, medical, legal advice. That is provided by your personal tax expert. This is information that I can help you have a better discussion with your CPA about. So when you receive an RSU, many times they'll grant you, but maybe you have to work for a certain period of time and then it vests. For RSUs, once it vests, it's yours. So unlike other type of incentives, there's no cost to you to receive an RSU, but you don't get all of it. And this is why. So let's say that you receive 110 units of RSUs. You're getting basically compensated with a stock that's restrictive instead of cash. So you're not putting cash in your pocket, but your paycheck's going to say that you made a bunch of money. And because you made more money, guess what? You owe more in taxes. So this is how it is handled in that companies, let's say you got 110 units, they'll sell off some portion of that or withhold, let's say 10 of those units to cover the taxes on your paycheck. So it's kind of paying those taxes in advance in exchange for not giving you all of the units that you were granted. When you go to log into your interface, maybe it's a brokerage, maybe it's Fidelity, maybe it's E-Trade, wherever you're able to access your grants or your stock when it's transferred to you, then you're going to have the net difference of what was granted to you versus what was sold to cover taxes, if you will. So you might ask, I paid taxes then on that RSU when it was granted to me? Yes and no. You paid income, taxes were withheld. Now, taxes were maybe withheld at 22%. When you go to file your taxes, you could be in a 37% tax bracket and maybe enough wasn't withheld. Or maybe you're in a lower tax bracket and they withheld too much. Now that gets tied out when you file your taxes. But this is all ordinary income. As part of you working for that employer, they compensated you through this non-cash award, basically. You have the stock that has value that's in your brokerage account and you can sell it. So when you go to sell it, now we're looking at a capital gain or loss where we should just be comparing the price at the time that you sell it with the price at the time it was issued to you. What happens, and the most common mistake I see, big red flag when I see brokerage statements, is that I see a stock sold with a sales price and zero cost. Super common for this to happen. Some brokerages will actually adjust the cost basis for the amount you've already paid taxes for on your paycheck on the original brokerage. Some will do it in a supplement, and sometimes it's on us tax preparers to actually calculate that difference and make sure that that cost that you've already paid taxes for is accounted for when you go to sell the stock. It not always is, and it is a mistake if it's not. And what happens if you report a sold stock with a zero cost basis and you've already paid taxes on your paycheck when it was issued to you? You're paying double on the same income. And that's the last thing I want you to do, is pay more taxes because of a mistake that could have been caught during the tax preparation process. So definitely something, when you have RSUs, it's a great time to use a professional. It is not a great time to do a self-prepared tax return. And unfortunately, I do see those come across my desk as things that I'm amending to fix when someone does have stock options or an RSU grant and they file their own taxes and not realizing, hey, there's something that's maybe just not straightforward that's causing you to pay double taxes. And it's a simple adjustment on the return to correct it. Have a relationship with a tax expert that knows RSUs, if you're receiving them, knows all the components of your tax returns. Not every tax person is specialized in everything. So make sure you have a good fit with someone who understands how to handle these and question them. Make sure you're not paying tax twice. If you are paying tax when it is granted and vested and it shows up on your paycheck and ultimately your W-2, that that income is being adjusted when you go to sell it. So, and another thing that you can be talking to your advisor about is when you sell it, right? Because you're looking at now short-term and long-term capital gains as options when you sell it. But you also need very cognizant of the price, because we're seeing prices shoot up or prices shoot down, and you could be in a capital gain situation or a capital loss situation. So just to recap, it's super important to understand how RSUs are taxed, provide the documentation to a tax expert that knows how to handle them on your taxes, and question them and make sure you're not paying taxes twice. You are paying taxes on what the units that were withheld or sold to cover when the RSU was granted and vested. You should have the capital gain adjusted by that amount and part of your basis in that stock when you go to sell it. If you like the content of this video, ring the bell and follow my channel, and watch other videos that can help you either in your personal or your business life have more freedom and pay less taxes.